So we are currently having one of the longest green streaks or longest rallies since September of 2021. This is coming from CNBC, and I'm here to update you on overall market conditions. What's going on, team? It's Ricky with TechBit Solutions. I really hope that you learned something new, and if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. Today's video is going to be very short and sweet, so let's just go ahead and jump right into it. The first thing that we're going to be talking about is, I said September, it's actually November of 2021. So NASDAQ finishes higher to clinch the longest winning streak since November of 2021, right? If we take a step back and look at the overall NASDAQ market for QQQ on the 4-hour time frame, we can see from overall lows, which was last Friday, to current highs, pretty much testing the previous resistance level. Again, previous, just making sure that I bring awareness to that, of right around 374, 375. Right now, that is a 9% move. So for TQQQ, which is the triple leverage ETF that I personally like to trade, right, from overall lows to overall highs, we could see that we offer about a 29% return. And again, this has been in about 1.5 weeks. So a very, very attractive return on NASDAQ and S&P 500. But what's to come, right? I wanted to share this article with you guys. I found it to be quite interesting. It says Fed is likely to cut rates below 3%, making bond market attractive now. So what exactly does this mean? Well, a lot of us know, right, if you've been following these FOMC meetings, which are these like Fed meetings where the Federal Reserve comes together on a monthly basis and they decide based off of economic data if it's good or if it's bad. And depending on how the economic data is coming in, they determine, should we be raising rates or should we be pausing, meaning leaving it as is. As right now, based off of what Jerome Powell said, who's the head of the Federal Reserve, on the last FOMC meeting, he has no expectation to be cutting interest rates anytime soon. And he says none of the members are even talking about that. It's either pausing or raising interest rates based off of the economic data that's coming in, right? So we know that we're at around 5.25 to 5.5% over the last several meetings, right? Because we've paused with 3 consecutive meetings. The past 3 months, we haven't raised interest rates. We pretty much have maintained the interest rate at what they are. We are at an unchanged 22-year high, right? But what's to come, right? We have then them taking the Fed fund rate down a bit below 3% and pausing the balance sheet runoff, in which we think might be in a recession, right? So the whole idea behind that is, what does it mean by cutting rates below 3%? It simply means, and I wanted to provide this for you, it simply means that they're going to make it more attractive. They're going to make it more attractive for other avenues of investment, because now saving accounts and CD accounts, right, are going to be earning so much less than what they were before. So when they drop that, right, then they're going to look for a safer way to invest their money, not necessarily the stock market. And as of right now, that's probably going to shift to treasury bonds, right? For those that are unaware, treasury bonds hit, what was it, like a 16-year high? We went to previous highs of what they were back in 2007. A little scary to talk about that, right? They're at the same level that they were back in 2007. And what happened in 2008 and 2009, right? But as of right now, yep, treasury bonds are a pretty attractive investment. At least they were when they surpassed 5%. They've corrected themselves since then, but again, a much more attractive investment, because in comparison to the other safer form of investments as CDs and or saving accounts, right, which is pretty much a guaranteed interest at whatever that return might be, now they're going to be earning less on these saving accounts and these CD accounts. Now the treasury market is going to be viewed as not only a safer form of investment versus the stock market, but also because they're offering such an attractive rate at nearly 5%, pretty much guaranteed, then again, it pretty much just encourages people to kind of move their money from saving accounts to and CD accounts all the way over to treasury bonds, which again offer a much more attractive investment, especially if the Federal Reserve does begin to cut rates below 3%. Just something to take into consideration. And I think that they said it quite nicely here, right? So it says, we're frankly not getting paid enough to reach further down the capital structure, said Adam Bloch, a portfolio manager, total return team. So adding that they are keeping 20 to 30% in dry powder across most of their strategies to take advantage of any stress ahead. So the whole idea is, again, they're not leaving enough pretty much room for these institutions to be able to make their money, right? And he gets a little bit more into detail about where focus again to locking in record high current yields, which again, bringing us back to the treasury yields being at 2007 levels, a much more attractive and safer form of investment than investing your money in the stock market. I've heard more people talk about investing in treasury bonds more now than I have in my adult life than ever before, right? And it's because, again, those treasury bonds are pretty much paid back by the government. So it's as close to guaranteed as possible. The stock market is not guaranteed, right? You can invest $500,000 in the stock market and it doesn't need to yield you any guaranteed return. Bond market's different, right? When it comes down to these treasury bonds, they offer a specific rate. And when they surpass 5%, you have to think people with hundreds of thousands of dollars, if not millions of dollars, are going to get a guaranteed return of at least 5% for whatever the timeline might be for that treasury bond. So something to take into consideration. The last thing that I want to share with you is the reason I'm sharing this with you is the reason I found that article to be so interesting is if demand does begin to pick up for these treasury bonds, normally the stock market reacts in a negative way to that because money is being taken away from what could be invested in the stock market and now being invested in safer avenues such as treasury bonds, right? And the last time that this was announced that, hey, treasury yields, treasury bonds surpassed 5%, the stock market sold off because the market knows that when demand begins to pick up in other avenues, then demand begins to slow down for the stock market and it becomes a less attractive, less demand for the overall stock market. So just something to take into consideration, especially after this really strong rally that we've experienced for the past week and a half. It's going to be very interesting to see how we end the week, right? The last thing that I quickly wanted to end with is if we look at the overall NASDAQ market, right? I pointed it out in the very beginning of this video. We are approaching previous highs of around 374. Just something to take into consideration. It doesn't mean that it has to get rejected just like it has before, but the last time we ran up, we did get rejected, which has been a common resistance range. And after a 1.5 week rally, we just can't be surprised, right? RSI, extremely overbought, MACD, overextended. We shall see, right? Is the demand going to continue to push the NASDAQ market and S&P 500 to new highs, ending the year strong? Or are we going to just get rejected once again and sell back off to previous lows? Something that we'll have to wait and see, right? Why try to predict when you can wait and react, right? A very simple approach that we try to take when it comes down to trading these markets. So again, I'm excited to take on the market with you guys all tomorrow at our live trading session. I trade live every morning and I'd love to see you there. It's the second link in the description down below. And you get to see every entry, every exit, every thought process behind every trade, my good trades, my bad trades. You get to see all of it, right? And it's live, real time, every single day, right at market open. And if you want to see this, it's the second link in the description down below so you can watch me trade live as soon as tomorrow. I appreciate your time. Hope that earned a thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take care, team.